Governments around the world draw up budgets each year as they plan how to run their countries. To do that, they must look at how much they will get and where that money will come from. In Singapore, most of the nation's revenue comes from taxes. This include income taxes companies and individuals like you and I pay, as well as taxes on goods and services, property, custom duties, and so on. The government also charges fees for various services from schools to car parks. These go into the country's revenue as well. Singapore also invests reserves built up over the years. Some of the returns on these investments go into the nation's coffers. Although the different taxes collected contribute the most to our revenue, the net returns from these invested reserves by itself is the single largest source of government revenue. To meet future needs, the government is also looking at ways to increase revenue, such as by raising GST and borrowing to fund infrastructure investments. And these are some ways Singapore funds its expenses. Stay tuned for the next episode in the Business Times Budget Explainer series, where we dive into the net investment returns contribution.